Morning, Chairman Crapo, Senator Brown, and members of the committee. I want to start by simply thanking you, Mr. Chairman, for your reference at the start of the hearing about the need to address commercial real estate and the problems that our industry is having on the rest of the economy. I also want to thank Senator Brown for your focus on the need for rental assistance for individuals and families. That's very, very important. And finally, I would like to comment that Senator Warner and Senator Toomey and other members of this committee were very instrumental in trying to create a very good program, the Main Street Lending Program. I'm here today on behalf of the Real Estate Roundtable and the 19 national real estate trade associations that are referenced in my written testimony. People out of work and businesses shuttered and denied income for months have suffered immensely in this pandemic through no fault or action of their own. Many of these people and businesses have struggled to pay for food, struggled to pay for housing, and struggled to pay for the rent for their businesses. For owners of apartment buildings, retail facilities, hotels, office buildings, senior housing, and other buildings, the situation is dramatically affecting their ability to pay their payroll and causing layoffs of building maintenance and security personnel for them. It is impacting their ability to meet their debt service obligations, which increases pressure on financial institutions, pension fund investors, and others. And it is pushing property values down to the detriment of local governments. It's causing much stress in pools for commercial mortgage-backed securities. It's threatening to result in countless commercial property foreclosures. The situation must be addressed. I want to thank Congress and the administration for the quick, deep, bipartisan COVID relief action taken this past spring. Without that action, the situation for the nation's economy would be much worse. But many of those programs, as well-intentioned and desirable as they are, did not reach beyond a relatively narrow definition of small business. That role was left to the well-intended Fed-administered Main Street Lending Program. Its goal was to provide capital to mid-sized businesses with COVID-related economic problems that can't obtain capital elsewhere. Unfortunately, as Mr. Scott just mentioned, the Main Street program is not lending. The result, countless mid-sized retail businesses, restaurants, hotels, commercial, multifamily building owners are moving closer to shutting their doors forever. As these Main Street businesses run out of reserves, they miss their rent, utility, and tax payments. They furlough and lay off employees. They begin to look to bankruptcy and abandonment as solutions. The Main Street Lending Program is simply far too risk-averse, as Mr. Scott said, to respond to the rapidly developing conditions for many Main Street businesses. These Main Street businesses need assistance now. They are risky, but not because their product or their business line is risky. They're bearing a huge, somewhat immeasurable new risk that is based on governmental policy, the ability to keep clients, customers, and guests healthy, in particular, the timing of finding a vaccine. These are the businesses that Congress wanted the Main Street Lending Program to serve. They can't get capital elsewhere. They are disproportionately minority, women, and veteran-owned businesses, and they are increasingly running out of options. Why? Because there's no incentive for banks under the program to market these loans and make the loans. In addition, the program's eligibility, affiliation, and underwriting rules are not designed to meet the needs of the businesses that increasingly need this assistance. Both of these problems could be addressed administratively without additional appropriated funds. We should move, as was suggested, the loan, 100% of the loan, instead of 95% of the loan, should be moved to the Fed. The bank should continue to service the loan to maturity, and like a pool servicer, it should be compensated by the bondholders, in this case, the Treasury Department. Perhaps regulators should be instructed not to criticize banks to make Main Street risky loans, as they currently are criticizing them. Incentives for banking a loan won't solve the problem, though. Administrative action is also needed to reform the mixture of misapplied small business administration lending eligibility rules that bar assistance, for example, to any commercial real estate business. We need to deal with inappropriate leverage limits that hamper the usefulness nearly to all retail stores and restaurants. And the underwriting rules that are in place now simply do not work for any asset-based borrower, whether that's a manufacturer, a restaurant, a retail, a commercial, or multifamily owner. We need incentives and we need eligibility rules that make sense. Congress, though, should take more action as well. we urge that Congress provide additional rental assistance to residential and business tenants. We think that the tax code should promote healthy workplaces. We want to facilitate debt workouts. There's going to be a tremendous amount of debt on all kinds of businesses that will need to be worked out. We need to provide reasonable liability protection against COVID lawsuits that are unnecessary in many cases. And we need to develop a federal pandemic risk insurance program. These actions are by no means simple and by no means small. We understand that. But together they will help America's families and businesses recover, and they will allow this job creation to move forward. Thank you, and I look forward to your questions. Thank you very much.
Thank you, Mr. DeBoer. DeBoer, maybe I would go to you next. And in the minute or so I have left, minute and a half maybe, could you just respond, both you and Mr. Scott, in your description of what needs to be done, had some pretty significant overlap in terms of how we could improve the Main Street facility. And rather than focus on where you may or may not have any disagreements, could you just, again, quickly summarize what do you think needs to be done in terms of making the facility more available in your world?
Thank you very much. First of all, banks are not incentivized to lend under this program. They have a 5% retention on the loan, and they're underwriting under basically under traditional underwriting criteria. Well, traditional underwriting criteria would say these are risky loans. They get criticized by regulators for doing that. They have the risk of the 5% loss, even though we know that these are risky loans. So we share the view that 100% of the loan should move to the SPV, the Fed facility. We share the view that maturity should be longer, I believe. I think we share the view that amortization of the loan should be delayed a little bit longer and occur later on in the life of the loan. And I believe that we share the view that the underwriting rules, for example, requirements that tie the loans to EBITDA or that tie the loans to a certain leverage ratio need to be revisited because they simply do not respond to these risky businesses. EBITDA means nothing when you have no income. And so there should be more traditional lending criteria that accommodate asset-based borrowers. So you have loan to value, or you have loan to cost, or loan to receipt, something that is different than what we have now. So incentivize the banks and broaden the eligibility. And in terms of, just one more second, in terms of the eligibility and certain sectors, the administration and the Fed lifted the SBA eligibility rules from their traditional SBA program and suddenly decided that that should be the applicable eligibility rules for a Main Street lending program, which bars certain companies and businesses. Certainly real estate are barred. And there is no reason for this, and I don't believe that Congress intended that for this program or, frankly, for the PPP program where they did the same thing.
All right, thank you. My time is up. This is helpful. Senator Brown.
Thanks, Chairman. And Mr. DeBoer, thank you for speaking out twice, I think, in your testimony for rental assistance, emergency rental assistance. And many of us fear a wave of evictions in the coming weeks because of the expiration of the unemployment benefit.
Or we'll go to Senator Rounds. Senator?
Thank you, Mr. Chairman. Let me begin with a question for Mr. DeBoer. First of all, I want to say thank you to everybody just for participating today. Given the requirements associated with the Fed's Main Street lending facility and the challenges of taking on more debt, one alternative approach that has been suggested to assist businesses in need would be to allow Treasury to buy preferred equity stakes instead. This would be particularly helpful in sectors like hospitality and tourism that have high overhead and real estate expenses. It would also provide much needed capital without further stressing balance sheets. I understand that Congressman Van Taylor in the House and Senator Moran have been working on different but similar preferred equity approaches. My question, could you discuss the advantages and disadvantages of preferred equity purchases compared to the Main Street lending facility? Mr. DeBoer.
Thank you, Senator. As a native South Dakotan, it's great to see you, and best wishes to you. Let me just say that the preferred equity option comes up because typically for loans that hotel loans, restaurant loans, lodging loans, and so forth that are packaged in commercial mortgage-backed securities, those loans, those transactions cannot allow additional equity or additional debt to be put on them. They can only have equity. And so that's the advantage of using a preferred equity approach. The problem, as I see it, is simply whether a business wants to, in effect, give equity to the United States government in their business. And I'm not sure whether the appetite is really there. But I will say this, that the focus and the efforts by Congressman Taylor, by Senator Moran, by you and others in the Senate to look at this is very, very important. This problem won't go away. Some businesses have too much debt on them and can't take any more. Some businesses don't have any more collateral or inventory to pledge for more loans. And as I said, some businesses' loans are tied up in a package, a pool, which won't allow any more debt. So we're very open to exploring this with you and other senators and members of Congress. Something has to be done to assist these businesses. I would say that I think that Senator Toomey is correct in saying that a lot of businesses can get traditional financing, but those who can't are really out on a limb and they have nowhere to go. And those businesses are the ones we just described: restaurants, retail space, hotels, real estate companies in certain senses of the word. And so I thank you for your focus and your question, sir.
Thank you.
The impact be on the real estate industry if states, cities, counties had to cut investments in infrastructure and education, public health, safety, raise property taxes to continue paying for essential services?
Well, it would be, thank you, Senator, it would be bad. I mean, real estate and state governments, infrastructure are all intertwined. The health of real estate is critical to the local government's health, and the health of state and local governments are critical to real estate's health. So we're intertwined. And I maybe you were interrupted. I also wanted to say, because commercial real estate employs so many people, it pays so much taxes. In many cases, around 70% of local budgets are derived from revenue from commercial property taxes or transaction fees. As our marketplace deteriorates and can't get credit, and the tenants in our business deteriorate and can't get credit, that will put more pressure on what you're rightfully flagging for everyone is already a problem. And it could get worse as tenants are unable to pay rent, as landlords are unable to make debt service, and as values drop.
Yeah. And of course, in the real estate industry, the quality of life or the work environment is critically important. And these services go to the very essence of that in terms of adding value to where real estate property is located and what they can demand for price. Isn't that fair to say?
Absolutely fair to say. And I would add to it, given the current situation and the world we live in now, how states are able to help keep their transportation systems clean and healthy so that workers feel confident going to and from their place of business and so forth is very, very critical. And that's an added expense for state and local governments as well as businesses, by the way.
Thank you. Senator Scott.
Thank you, Mr. Chairman, very much. And thank you to the panel for being with us this morning on a very important topic. I'll second Mr. DeBoer to ask you a question that you won't have time to answer, but I'll ask you to answer it quickly. And that has to do with creating access for our commercial real estate market. There's no doubt that the leverage limit set forth in the Main Street Lending Program term sheets will not work for most commercial real estate companies. How can additional flexibility help create more resourcing of those commercial real estate companies and investors?
I'll try to be very quick, Senator. First of all, because the Treasury and the administration use the historic definition of a small business under the SBA loans for both the PPP and the Main Street Lending Program without any authorization or instruction from Congress to do so. They picked up these historic definitions. Those historic definitions redline out certain business activities, definitely including renting real estate, developing real estate, leasing real estate. So point number one, get rid of these inappropriate eligibility rules for both the PPP and the Main Street Lending Program. They have no application here. They shouldn't be allowed. And point number two is the affiliation rules. And this really isn't a real estate directly concern, but the affiliation rules, which have received so much publicity, certainly should not apply in the case of these mid-sized businesses, 5,000 to 10,000, as Congress has suggested. And then finally, you raise the underwriting criteria, and again, certainly EBITDA has no place in an asset-based lending program, and it should be set aside. And finally, I would say this: if we're asking the Fed to make loans to businesses that otherwise can't get financing, which is what I think we all want, those loans are per se risky. And when a bank makes a per se risky business under current and normal operating conditions, regulators criticize it and mark it down and require more capital. Those things should be addressed here. We should be encouraging and incentivizing banks to make these loans where they're not right now. They're required to retain 5%. That's too much. They don't get paid enough to service the loans. That's no good. And they're open for criticism when they do make the per se risky loans that we always want them to make. I hope that answers it. I'm sorry for going long.
Thank you very much. I think we need more time, but maybe I'll have a second round. Thank you so much, Mr. Chairman, for your indulgences. Yeah.
This question is for all the witnesses, and I'd like you to ask to be as brief as possible. If you were in a position where you could say, I've got a couple, 2 or 3 programs that need to be funded absolutely unequivocally to keep our economy on track, where would you target those resources?
Yes, sir. Thank you for that question. I would first point out that the recommendations that I've made on the Main Street Lending Program and that I believe Dr. Scott has made really require no additional funds from the federal government. They are administrative. They could be done tomorrow by the Treasury and the Fed if they wanted to. Secondly, I would reload the PPP to help small businesses. And remember, in effect, that is a supplemental unemployment check too, because much of that money passes through to employees. And thirdly, I would set up a rental assistance fund for troubled residents and business tenants, so that if they could demonstrate severe economic hardship, they could tap those funds and pay their rent. The PPP could then use more of the money to pay payroll and utilities and taxes, and you'd have the Main Street program helping mid-sized businesses. And I think you would have a much better environment if you did those 3 things.
Dr. Spriggs, no federal programs for rental assistance. And I do not believe there's any federal programs for folks who own rental property when those rents don't get paid. Could you just very briefly talk about the impacts if we don't do anything when folks can't pay their rent, and not only the folks that'll be put out on the street that can't pay their rent, but the folks who own the property that is the rental property? Because a lot of these owners are not rich corporations. They're families that may own a duplex or a fourplex that have rented it out for additional income or for retirement income. Could you talk about that just briefly?
Sure, Senator. Thank you for the question. I think it's tremendously misunderstood what rent goes for and what it's used for. And the rent, what we call the rent obligation chain in the economy, is extremely important. And it begins with the renter, the business or the person, being able to put housing for themselves and their family or to house their business. They pay the landlord. The landlord then pays for maintenance workers, for security workers, for other things to keep the building safe and healthy. It pays for the utilities. It pays for state and local taxes. It meets its debt service to the lenders. And the lenders, in turn, whether they're maybe they're banks, but they might also be pension funds or what have you. And those pension funds or banks, in turn, pay the bondholders or the pensioners a return. As this rent is not paid, the weakness will continue to erode the ability of owners to pay their payroll, to pay their taxes, to pay their debt service. Financial institutions will weaken. Pensioners won't get the return that they want. state and local governments will lose tax revenue because properties will be revalued in this new world that is based on rent receipts. If you don't receive rent, you don't really have much of a value. So this is extremely important with the underlying part of our economy. I appreciate it very much. And Senator, I do want to thank you for co-sponsoring the Restart bill. A number of senators are co-sponsoring that bill by Senator Young and Senator Bennett. And that bill would do an awful lot of what you're talking about as well. For example, the conversation on CDFI. The Restart bill directly authorizes the use of CDFI to move this money through. So I thank you for that, and I thank you for the question.
I've got a couple of questions. Mr. DeBoer, I want to start with you. I agree with a lot of the proposals in the Main Street fixes that you've put out. As somebody who was very involved in those negotiations along with Senator Brown and others, I was pretty disappointed with the ultimate facility, that it was not as flexible as we approached, and I think it left firms and workers really unable to take advantage of that program. You pointed out that hotels and retail have withstood some of the largest declines, and that actually then translates into if the landlords aren't paid, they can't make their debt service. That is going to really trickle into the CMBS market, and we could have a crisis similar to what we had in earlier decades. So if you want to spend a little bit of time, and I do want to get to CDFIs, on some of your proposals around the preferred equity structure that you suggested, and if my understanding is that preferred equity structure of any ability to invest would really be irregardless of what kind of loan portfolio the developer real estate entity had. Is that correct?
Frankly, my proposal, Senator, and by the way, Senator, earlier I expressed my appreciation to your involvement on the Main Street lending program to begin with. It's a much needed thing. There are a variety of proposals on the preferred equity side of things. I think that my point of view here is that it should not apply to every potential borrower out there, but should be targeted to borrowers who have loans that are tied up in CMBS pools, because it is there that you cannot put additional debt. The borrower cannot assume additional debt on relative to those loans. That's where the program is needed. Again, I'm not an expert in this area, Senator. I'm sorry, and maybe I could get back to you with more.
If you could get back, I think, as we're trying to explore, while we give rental forbearance, which I think is appropriate at this point, if we simply push the problem up the food chain, we're going to have to grapple with it at some point.
Can you comment quickly? There's a vote on. I'm going to have to run, but this seems to be an area of common ground, and I wish there was broader recognition that getting funds into the hands of tenants, to pay their landlords on the residential side, but also, as you pointed out, on the commercial side, is something that would be very important at this moment.
Yes, and it's only going to get worse. The Multi-Housing Council has their numbers out on rent payments for this month. They've dropped another 5%. So, and that, of course, is connected with the burning off of federal assistance. So that problem is only going to get worse. And you correctly point out that the moratorium does not solve the problem. It creates a bigger problem once the moratorium is lifted without rental assistance. So I very much favor rental assistance. And I think these moratoriums, to the extent that they're done, and some have been overly broad, to the extent that they're done, they should only apply to residents who have some economic hardship due to the COVID. They shouldn't be blanket moratoriums on eviction. So thank you for that. And I would also add on, I didn't mean to speak over Senator Kennedy. That was rude. And I just I was trying to get to the.
I'm gonna unfortunately, Jeff, I gotta run and vote now. But
Mr. DeBoer, and thank you for your conversation as well. You made the comment that Main Street lending facilities, we don't need to invest any more money or inject any more money into it. What we need is structural change. And I think I've heard that consistently from all of you. But let me ask you this, and I agree with you. I think there needs to be structural change. Would you support, though, clawing back any of the unused money in the Main Street lending facilities? Or do you think it should still be there to be used as part of this restructuring?
Frankly, I think it should be given an opportunity to work the way that Congress wanted it to work. And you've given the money. It's been a hamstrung. You should take off those restrictions and let it work. Because these businesses, whether you claw it back or not, these businesses need assistance, and this is the only program geared to provide them. So I would favor keeping the program. I would make it work, though. I would use that money.
So what if we were to put a bill on the floor of the Senate this week that actually says that money that is unused should be clawed back beginning next year? What kind of signal is that sending to businesses in general about where we stand or what we're thinking here in Congress?
Well, I think the signal is many signals. One of them is that there's not the will to force the regulators to make the program work the way that you intended it to work. And I think that's a bad signal. But again, if you can only do some things, you've got to do what you can get done. I also think that people understand that this bill is a part of the legislative process, and that as it moves along, that hopefully, you know, the PPP can be recapitalized and this money can stay at Main Street. So I'm not sure that this one vote or bill on the floor is the end of the world. I would also say it's a pleasure to be here with Dr. Spriggs. Frequently, business and employees and workers are viewed by the press and others as being in conflict. We're not in conflict. We work together with our workers, with our employees, and it's great to have the points of view articulated by Mr. Spriggs here today. Thank you.
Well, and let me just say this. I didn't get, from the conversation that we had today, I don't think any of you are in disagreement. I think the goal here is everybody is in agreement that there needs to be another comprehensive package. We all have to be thinking about the relief in a comprehensive manner here. Nobody should be choosing winners and losers.
But by the way, we've talked a lot about opportunities, and all of us, I think, have opened our eyes wider to the lack of opportunities that certain parts of our economy and country have. And it is worth noting that since the COVID crisis started, 5% of businesses owned by white business owners have failed, while 19% of businesses owned by black owners have failed. That's not right. And many of those businesses are these Main Street businesses that currently cannot get this access to financing. And that's just another reason why I would put that money to work downtown and not let it sit idly in a vault somewhere.
Thank you.
Thank you. Senator Jones.
Thank you, Mr. Chairman. Thank you to all our witnesses. I really appreciate it. Mr. DeBoer, I'd like to just kind of follow up on that last comment. First of all, let me thank you. You and the realtors have been very helpful with my staff and offices on a number of things that we've been successful on and others that we're thinking about. So thank you personally for the work that we've done together. But I'd like to follow up on that question for you and the other panelists to weigh in, and that is access to capital. We have seen that early on, minority businesses had trouble accessing the PPP program. I haven't seen the latest statistics on that, but we had to make some carve-outs to help with that. We have seen that businesses fail. As you mentioned, 19% of black-owned businesses have failed as to compared to only 5% of their white counterparts. I understand you taking some of the money that we have that is left over to maybe help infuse and actually stimulate those businesses. But this is a long-term problem. This is not something that the pandemic caused. Minority businesses and the struggles that they have are really they've been ongoing for a long time, and the pandemic just put a spotlight on those. So how best going forward can we ensure that minority businesses have access to capital? How can we ensure that they are as structurally strong as their white counterparts? And I'd like to ask, I'll start with you, Mr. DeBoer, since you just mentioned it, but I'd like to get the others to weigh in as well on this question. I think it's incredibly important for America.
It is, Senator, it is incredibly important, and I will be very brief. It's a complicated and it's a long-term answer to how we address the problem that you've described. But one thing that you might consider, and I, again, don't want to say it's the greatest, well, let me just put it this way. Senator Menendez has a bill dealing with, that would encourage businesses to provide, and they would be measured more by the types of opportunities and investments that they make in into minority women and veteran-owned businesses, and having a benchmark, a structure, a metric that people could and businesses could be measured against in that bill. And the bill also passed the House, I believe Congressman Meeks put a bipartisan bill over there. I think having something that businesses would be measured on in their ESG statements or in their filings to the SEC would be very, very helpful in this regard. And I want to tell you that my experience talking to CEOs around the country in a variety of businesses, everyone seems aware and intent and focused on doing what they can do to address this problem. We'll see, but they certainly seem to be willing right now.